Hello, everyone. I'm Rob Smith, in the Black Quad Edge VTF here at T3 Live with this week's market wrap-up, and we got a rate hike, and who cares? So basically, market does a whole bunch of nothing. SPY does go divvy today, but as you can see, we're still in a tight range for the last 3 weeks. There's the weekly chart here, and so really, it's been continues to be case-by-case basis. If you go to the NASDAQ, still tech strong, slightly inside week to the upside a little bit, and the Dow Jones Diamonds here. Stock, doji. So it's still 2 weeks inside that 2 weeks ago's spot. What we did see was a little bit more strength out of the small cappers. Remember, they were underperforming, but then in the last bit here, we got the hammer off the lows, the big day up. Outside day here, so small cappers starting to firm up just a touch as they were right on the month. Still in the monthly, still putting in the higher lows, though. However, you always want to look for that. So when I talk about the groups, really, that's what we got to do is we got to go after where the movers are. We were hoping for some more out of the XLF. What we did get was this. Inside week to the downside, albeit slightly. Still 2 weeks completely in this bar's range. So 2 weeks ago's range is really a lot of the stuff that we're looking at. And even with the seemingly downdraft today and on Fed Day, what I call the vortex of the intraday chart, if you don't start looking at the monthlies and stuff like this, you'll see when they're really not doing much. At least on this month you got red, but not doing too much. When you look at those longer-term stuff like SPY or whatever. Well, we do have those. We did have this to see if we're going to get any follow-through. First of all, we did have the Goldman Sachs drop in here, and you see trying to drop in here. But going forward to next week, you can have J.P. Morgan stays as inside week. Citicorp goes inside week, so you can follow that stuff in the financials. Of course, they're still trying to see if XRT can get out of its way, and it was actually green on the week. And if you look at the daily, you're going to see this down in here. So it's somewhat firming up and going inside day to see if it can finally make a move back up into here, or if retail is truly doomed to take that down. If we go to the oil, still waiting for this too. XLE goes up for a day and then drops right back into the middle of this range. So we'll be looking at the crude oil, and crude oil does this, if there's any hope. For next week, setting up a hammer. So we'll see if that this big range here just maintains and comes back up into it. If we're really going to take out any of these lows, that hammer would fail, and we'll see how that goes. One slight new addition problem here would be the trannies. You can see the trannies, at least for the last 2 weeks, been going down. So this is what the trannies are doing. They had their one moment of glory and then right back into this. So we'll see if that continues. At IBB, gap down today with BIIB, having all sorts of troubles yesterday, but IBB then gets it also from Amgen today, which has been the leader, and not the end of the world unless you're long from yesterday or so. But now Amgen starts to come in, so that's a bit of a problem. We want to see who can pick up the IBB as we start to lose that. If you look at the XLV is still a little bit better, but it did come in this week. If we go to VXX, and, you know, when you have these sideways markets that are just pinned up here and you can't get the VIX going, that's what stuff like this really hates. And people are like, it hates a down market. No, it hates contango in the options. And that's why you're seeing this pronounced falling apart, and still does, except for today, closes a hammer, but still wanted a new all-time low. So in the morning, I always tweet out, hashtag mind the gap and stuff that we want to keep an eye on. And MGCO was on that list this morning, and that's something we can sink our teeth into. And you can see here, goes down. You even had plenty of time to go after it. It goes inside 60-minute range. Then once that equilibrium got broken, boom, straight up. That was a really nice move. We also had a nice move in things that we look for, combinations of time frames. So Wynn Resorts was real nice this week because we knew it had an inside month here. And so once that inside month broke, we want to, or starts to break, or we look for additional inside bars. You can see that right here on the weekly. It goes inside week, and we were looking for the measured move, and we got it. Up, sideways, measured move to the upside. So that was real good. So coming into next week, still a bunch of 2 week tight ranges, and so somehow we got to start breaking that because otherwise it's straight sideways. And we're seeing, you know, even with the somewhat weakness in the financials, the market's still hanging around. And so it's going to be a matter of how those pieces, parts, if you will, how these sectors all start to go and who can start to show strength. We know it was been the tech for the most part, and this week strength in the home builders. So there's still sector rotation going on, and that's what we're going to be monitoring going forward. All right, I hope everybody has a wonderful St. Patrick's Day. I'm Rob Smith of the Black Quad Edge VTF here at T3 Live with this week's Market Wrap-Up.